and a very, very warm welcome to you all. Thank you for joining us for this special BKL webinar. We're going to be covering supporting your business through coronavirus this afternoon. It is hard to believe that 3 weeks ago I was presenting our BKL budget webinar in a bustling office full of 140 people. Like you, I'm now ensconced at home, a little bewildered by the pace of change that we've all seen. So first and foremost, we hope you, your families are all safe and well. But clearly these are extraordinary times, and that has led to some extraordinary measures by the government, whatever your political persuasions. So we're going to spend the next hour talking through the following areas of government support. There is the coronavirus job retention scheme, the mirroring support for the self-employed that followed hot on the heels of that. We've then got the loan support arrangements that have come in for particular criticism. So we'll talk about how they are meant to work and some of the practical difficulties with those. There's also been some help for businesses insofar as deferral of VAT and income tax payments for the self-employed, and that is supported by a dusting down of the time to pay arrangements. There's also help with business rates that built upon the announcements that were previously made in the budget. And Daniel will finish off by covering some of the other measures that have been announced in support of businesses. I'm delighted to say, and hopefully will be somewhat relieved to hear the friendly voices of my colleagues who are going to be helping me today. So we've got Daniel Shear, my corporate finance partner. Hi, Daniel.
Hi, good afternoon, everyone.
We've got Wendy Harper, our head of HR.
Hi, hello.
And we've got Chris Smith, the Governor of Personal Tax at BKL.
Hi, everyone. Good afternoon.
So that's our crack team today. We'll start with the coronavirus job retention scheme in a second, but as always, thank you all for joining us in record numbers today. We're delighted you could join us and we hope you'll find this useful. You should be able to type little questions for us, and indeed some of you have already done that, so feel free to type away. Please bear in mind that normally I have David Wiscombe sat behind me, and behind that veneer of professionalism there's some frantic gesticulating going on. Wendy, Daniel and Chris are ensconced on the other sides of London, so I will try and field the questions and put them to them as best we can. If we don't have time to answer them all, and already we've had over a dozen, so thank you for that, we'll try and reply privately afterwards. But if we can take and deal with some of the questions just to flesh out some of the issues, we'll be delighted. And do please bear in mind, a lot of these announcements are brand new. We simply do not have the level of detail that we would like at the moment, but it's always helpful to understand what particular issues are out there. So let's start with the coronavirus job retention scheme. These are the headlines, but I think perhaps the most important point is the opening paragraph of the revenues guidance. This is designed to support employers whose operations have been severely affected by coronavirus. Now, exactly how they will police that, or whether that will be one of the specific conditions of the regime, like you all, we're waiting to see particular information. But what do we know? Well, it's open to all UK employers, and the scheme will be running for at least 3 months, starting from the 1st of March 2020. So a degree of backdating there, and the scheme may well be extended depending how long we have this pandemic and lockdown, I suspect. You must have already had a payroll scheme at that point, strictly the 28th of February 2020, but so be it. And this scheme has introduced a new word. Well, it's a new word to me anyhow, to furlough employees, broadly to place them on leave of absence. So they're still your employees, but they're not allowed to do anything, and we'll look into that in a bit more detail. And in headline terms, how does this work? Well, the government will pay 80% of their gross monthly wage, up to £2,500 a month, and they'll also, on top of that, contribute to the company the NIC costs and the automatic payroll pension costs that we're all now required to make on behalf of our employees. The employee retains rights. He's still your employee, but he cannot work for the company. So those are the key measures. As always, the devil is in the detail, and thank you for those who've already sent questions on this already. Let's have a look at who are our qualifying employees to start with? Well, they must have been on your PAYE payroll on the 28th of February 2020. A couple of you have asked, what about foreign employees? We do not think they will qualify. They may be on your payroll, but they're not under UK PAYE. So we think foreign employees are out. But it does include full-time employees, part-time employees, employees on flexible or 0 hours contracts, and employees on agency contracts. A couple of you have asked about, what about if you employ a nanny? Well, they're certainly employees. They should certainly be on PAYE. Our view is we think they're extremely unlikely to qualify. It's hard to see, going back to the point we opened with, how you could argue by making a payment to such an individual that you are supporting a business hit that's been severely affected, I should say, by coronavirus. And some of you are already asking, I think, the most vexing question at the moment, what about directors? We'll come on to that a little bit later if we can. We mentioned a certain degree of retrospection about these rules. The scheme also covers employees who were made redundant, who have been made redundant since the 28th of February 2020, if they are rehired. So there's also HR aspects to this that Wendy will cover in a bit more time. So those are the sort of individuals, specifically employees, who can qualify. When they've been placed on this leave of absence or furloughed, they cannot undertake any work for or on behalf of the company. And the only guidance we have is that includes providing services or generating revenue for the business. Training is permitted, and that has certain other implications that, again, I think Wendy's going to touch upon later, as is you are allowed to volunteer outside work. But you have a choice. If you want to furlough an individual, they cannot do anything for you. Exactly how they will police this, where the limits lie, is merely forwarding an email to another colleague to deal with. Is that going to cause issues? Again, we await the detail, but I think the principle is clear. They must be set aside and must not do anything for the company. We would recommend switching off their emails, arranging those to be automatically forwarded. Yes, they can still join in social conversations. Yes, they are still your employee. So you can still speak to them, make sure they're okay, reassure them, but they must not do anything. And again, that's very relevant in the context of directors that we'll come back to shortly. As far as sick leave, staff on maternity leave, there are special rules. I'll leave that for Wendy to cover in a few minutes. So let's go the right way. What can you claim for these individuals? Well, HMRC is frantically setting up a portal that will allow companies to reclaim those costs back, or to claim a grant, I should say, from the government. At the moment, it's not up and running. We are promised it will be there by the end of April. So there is not a lot more we can do in the meantime as far as expediting matters. What we can do is get all our ducks in a line, and I'll invite Chris to assist me in a little bit of time talking about the sort of information you want to collate. But for each employee who is furloughed, as we said, HMRC will cover the lower of 80% of the employee's regular wage, and that should exclude bonuses, etc., looking at their 28th February salary for full or part-time workers. We'll come
Tony,
on to
just interjecting very
Chris.
quickly. Sorry. Bonuses. One question we have had quite frequently is commissions as well, and commissions again are excluded from this calculation. As Wendy, I'm sure, will touch upon, the commissions can still be paid to an individual that's owed them, but for the purpose of the calculation for the claim, we have to exclude them. Okay,
thank you, Chris. So 80% of their regular wage, as Chris says, excluding bonuses, commissions, etc., etc. It's the lower of that and £2,500 per calendar month. So for lower paid employees, this is clearly going to give them the most protection. And the principle is there. It's about ensuring people have enough to live off, I think, in the short term. What if your wage is more than 80%? What if 80% of your wage is more than £2,500? Thank you for that question. As we'll come on to, the employer can optionally top up your wage. So they can give you your full salary, But the point we've stressed at the bottom of this slide is however much you are paid by your employer, they still have to operate PAYE and make the normal deductions, including NIC, and make auto-enrolment contributions in the normal manner. So the company collects in this money and then pays it on to you under PAYE as an employee. And as we touched upon before, HMRC will also underwrite the NIC costs and the minimum employer auto-enrolment pension costs on that on the lower of those two amounts we mentioned. So however much we claim back from the government, yes, we can also claim for NIC and pension costs on top of that. So we said before that an individual can't undertake any work, but I'll leave that to Wendy to move on to in a minute. What about those employees, sorry, I keep going the wrong way on the slides here, whose pay varies? It's a little bit more complicated, but this is the principle. If they've been employed for 12 months prior to making the claim, you take the higher of the same month's earnings from the previous year, or there's an averaging looking at the earnings for 1920. If they've been employed for less than 12 months, use an average since they started, and there's also a special rule if they just started and got in under the door, as it were, if they started in February. But I think that's going to affect a very few number of people. So that's people whose work varies. That's people who are on fixed salaries. How do you make a claim? Well, Chris, do you want to just cover this slide and the sort of information we need and how we can best collate that?
Yeah, that's fine. So at the moment, as Tony's alluded to, we know there's going to be a portal that's going to be available towards the end of April. We don't yet know the detail in how we're going to access the portal. One thing I would initially say is just be wary of scam emails that are currently going around to businesses and to individuals saying that this is the link to the portal. I've seen in the last couple of days numerous versions. Just look at the email address is the key that we're saying. Usually when you open up, it will say HMRC, but if you open up the email further or the email address further, it will give you a strange address. So that's the first point. If you're still struggling, copy the page and send it to your advisor, a BKL contact or somebody else to take a look at. We're expecting the revenue to send out an invite via or a notification in some ways, but it's not clear as to yet how that's going to go out. So keep an eye, I think, and just keep up to date with your agents. When the portal does go live, this is set information that we do know it's been published that they'll be asking for. And you'll need to provide obviously that detail together with the calculation of the claim, as Tony's previously on the previous slide detailed how to make the calculation. We have with BKL produced a spreadsheet that can be used to calculate the claim. And we think it's the detail, or it's all the detail that revenue have asked for. Whether that will be able to be uploaded or just actually keep hold of the detail and then replicate into the revenues format, we do not know. We hope it will just be able to be uploaded because it's quite a simple enough spreadsheet to use. So yeah, and I think, Tony, I've no problems with saying there that BKL are happy to provide the spreadsheet to individuals if they keep in touch with their regular contact and ask for it simply. Where we can, we'd like to be able to make the claim for clients if we can. There's no reason at the moment why not agents can't make the claim. Again, it's something we don't know from the portal, but I'd like to think we could do that. And of course, we can liaise with you, keep the spreadsheet and just make that claim as soon as the portal's available. We suspect it's going to be on a first come, first served basis, the way the revenue work. Quite possibly the first day the portal goes up, it will crash because of that being inundated. But if we've got details, we'll obviously be working behind the scenes to make sure we get those claims in for people.
Okay, thank you, Chris. Just following on from that, the claims can be backdated to 1 March once the portal open. That's when the scheme is deemed to start to run from. So as much as cash is king, unfortunately, it is going to be some time before businesses will receive these grants from HMRC. There's also been a fair amount of concern expressed as to how open to abuse the scheme may be. HMRC have made it quite clear that they have their normal right of inquiry into any such claims, and we'll have to see how this is policed. Grants will be paid via BACS, so you have to have a UK bank account. That's one of the other conditions. And as we said before, the company applies PAYE to the grants they receive, which have to be paid on in full to the individuals. Yes, they can top up those in the normal manner to make allowance for the fact HMRC are only guaranteeing up to 80% of the salary, but you certainly can't withhold anything beyond the normal PAYE deductions from the grants you receive. Now, these grants are making good, in theory, a loss of profits to the company, and HMRC state quite categorically that the grants are therefore taxable in the hands of the recipient business, whether they're subject to income tax or corporation tax. My learned colleague, David Wiscombe, bless him, did dig up a case from, I think it was about 100 years ago. Seaham Harbour, I think was the case name. Seaham Harbour Dock Company, where similar grants were provided by the government and the courts held they were not taxable. Now, I suspect they may amend the legislation to put this beyond doubt. I think it would be prudent to assume that these grants are taxable, albeit, as we say, there is some case law that suggests that may not strictly be the letter of the law at the moment. Now, a lot of questions, and thank you. I've been quite overwhelmed by the number of questions that have already come in. What about personal service companies and directors? Can a director be furloughed? And the issue we have here is whereas an employee can be told to step down and legitimately have no other duties, a director does have his fiduciary duties, which must be performed. He cannot completely walk away from that business. It may be possible if there's more than one director to furlough an individual who's a director, but particularly where it's a personal service company, as if they've not been hammered enough by the changes to IR35, albeit they have been delayed for a year in the circumstances, the position is not clear here. HMRC have published guidance that says directors of their own companies may qualify, and that is as far as the guidance goes at the moment. Our advice is this: be cautious. Certainly, if you want a director to claim, there may well be a filing position, but certainly that would require the director to completely step away from their day-to-day responsibilities. So if your director is still out there looking for business, firing off emails, contacting suppliers, etc., you will not qualify. And let's also bear in mind, typically directors remunerate themselves primarily by way of dividends. So the amount they can claim on a typical £10,000 a year salary will be relatively small. So people have to make a choice at the moment. Yes, they may, as HMRC, be able to claim in the future once we get the guidance, but are you prepared to completely step away from your business at this point in time for a grant that may only be a few £100s from HMRC under the rules as they stand? That is a decision people will have to make. As soon as we have further guidance, we will gladly share that for you. But the position is not beyond doubt at the moment. We await clarification. Similarly, what if you have your spouse on the payroll? Can you furlough those? Well, in theory, yes, you could. It should be possible for them to step away. I suppose our only slight doubt is it could beg the question from HMRC, well, what is it they've been doing all these years for their salary in the first place? And is that wholly and exclusively for the purposes of the claim? So we need to be a little bit careful. As I say, please have a look at our website. We'll give you a link to that at the end. As we await clarification, we will put more up there. What I'm going to do now is hand over to Wendy, because there is, of course, a human aspect to all of this and an employment law aspect to all of this. So Wendy will steer you through that. That'll give me a chance just to look through some of the questions. And once Wendy's covered the HR aspects, we'll see how we get on. So Wendy, over to you, please.
Thanks, Anthony. So yes, today I'm just going to cover some of the more practical aspects surrounding the the new scheme. Obviously, as Anthony so eloquently expressed at the beginning of this presentation, we're in very much untested and untried time. So a lot of the employment law that would normally affect some of the aspects that we're going to talk about, such as furloughing or consultation for redundancies, that's not been relaxed. And obviously we've got companies and people making decisions very quickly in order to protect their businesses and their people. So essentially I'm going to go into some of that, and I will talk about redundancy as well, just to remind you basically about the provisions in law and practical guidance around managing that. So if I could have my first slide, please, Anthony.
I'm trying.
Thank
there
you.
go.
Okay, thanks a lot. So in relation to furloughing employees, I think you've been given quite a lot of information about this already in terms of why companies are doing it and why the government has set it up. The one thing that I would really encourage all employers to do is to really focus on how you communicate with your people. I know it's often very tempting for leaders in businesses to try and protect and shield their employees from business problems. However, in this particular scenario, I would encourage everybody to be as open and transparent and honest as you can be as early on in your, the decision-making process that your boards and directors and leaders are going through in the next few months. The clearer you can be, the more reassured in a funny way your employees will be, because they're sharing the problem with you. And if you do have to make some difficult decisions later down the line, they're more likely to understand and comply and cooperate with whatever it is that you decide you need to do. So I would just encourage you to be clear, concise, and don't sugarcoat your messages, but do communicate regularly. And where you can, keep a record of what you've said to people and even put it in writing to people as well, just in case you need that later on. So when you're furloughing somebody or making redundancies, it really is a change to somebody's terms and conditions unless you've actually got specific contractual rights or clauses that allow you to do this. Most employers don't have those clauses in their contracts. It's typically called a layoff or a short-term working clause. And therefore, when we're entering into this brave new world of furloughing people, normally you would have to go through consultation, and that law hasn't been relaxed. Therefore, in order to avoid claims against you, either for unlawful deductions from salary or other cases, I would recommend that you get written acceptance from your employees to go on furlough. We have been developing it's evolved quite a lot, but I have a letter for that purpose, which I would share with people if they need it. But the benefit of that is that you're explaining precisely why the company is making this change, why it needs to do that, and you're getting the employee's consent to do that. And I've been talking to quite a few companies recently, and I've heard that without exception, 99% of people are happy to sign, because obviously they're also aware of the wider economy. You can't really hide from it. It's all over the news. In terms of people who are at risk or unhealthy, I know that I've had questions from people in the past, in the last couple of weeks, about can I furlough people in that circumstance? And obviously the guidance from the government is very much, it's about the role being redundant rather than the state of that person. I've been looking into this a bit further, and all I can advise, and it is an opinion, is that it's unlikely to result in a discrimination claim if you do furlough people who are at risk. They may have an underlying condition, they can't go into work to do a certain thing because at the moment it might be putting them in danger, but they might otherwise be perfectly capable of doing their job. Okay, so next, thank you, Anthony. Another thing to note is that individuals must be furloughed for a minimum of 3 weeks, and you can flex this between your employees. So you can put people on furlough and keep others on, and then swap, if you like, after 3 weeks. So you can re-furlough people later on, but again, it has to be for a minimum of 3 weeks. And that might just help you keep up morale, or actually to manage certain aspects of your operations more effectively.
Wendy, just jumping in there, sorry. For that purpose, one recommendation I would make for the purpose of the claim. I know Wendy said you can change for the 3 weeks, but if you do have people on monthly payrolls, and you are thinking of flipping, I would recommend going down the pay period, so probably a 4-week period, and then change it. But just make things easier for the purpose of the actual claim being made to HMRC.
Thank you, Chris. That's very helpful. And we mentioned earlier about maternity pay. So if it's a bit like if somebody's receiving SSP, some kind of statutory payment, you're not able to furlough them. But there is something in the maternity sort of arena here, in that if you offer an enhanced maternity pay scheme, you may consider furloughing people who are benefiting from that. The other thing to bear in mind, particularly if people are on statutory maternity, they might be better off for the first 6 weeks staying on that, because obviously it's slightly higher than weekly pay. And then an individual might actually choose to cease maternity or to stop their maternity leave in preference for being furloughed, because they may well be better off. But if they do that, they would not be able to return back onto maternity leave. And obviously that would have to be considered very much on a case-by-case basis. Okay. So a few questions that I've had as well. What if somebody refuses to sign an agreement to go on furlough? As I've said, I think it's quite unlikely if you get your communications right, but also employees are very keen to maintain good relationships with their employer at the moment, because there aren't many options out there. The worst case scenario is that you may be able to make the role redundant, but you would have to go through, if it's an individual, you'd have to go through some form of consultation with that person. But ultimately, you may be able to dismiss an individual who doesn't want to do that and make them redundant, or maybe consider some other action with that individual. It just depends on the circumstances. In terms of holiday, people can take holiday whilst they're on furlough. I've heard 2 different views. I don't know if Chris has heard anything about this. I've heard one view expressed that it's paid at the previous full-time rate, and I've heard another view expressed that it's paid at the 80%. Maybe that's an area that will become clear shortly. I think there's still a bit of a question mark over that. But individuals
It's not clear in the guidance, Wendy. No.
No. So again, that's just one thing to bear in mind. But we have heard that, and this is really to protect the key workers at the moment who will not have an opportunity probably to take holiday over the next few months. The government doesn't want them to lose that. So they have made it very clear that up to 4 weeks holiday can be accrued and carried forward over the next 2 years. Now, obviously, that might present logistical problems for companies if people are all trying to take lots of holiday when you're back up in operation. So you might want to try and plan for that. Under the Working Time Directive as well, just bear in mind that you are able to insist that people take holiday, but you are required to give twice notice, which is twice the length of the holiday that you wish them to take. And that might be something, when things get back to normal, hopefully, and you want to try and manage your workforce and resources over the next couple of years. So just bear that in mind too. Okay, so we mentioned earlier, or Anthony did, that furloughed employees can do training. Just bear in mind that they must be paid at least the national living wage or the national minimum wage for the time spent training. Okay. So the other thing that was mentioned earlier as well about if somebody's made redundant or leaves the firm, even off their own back really, after the 28th of February, you can choose, if you want to as an employer, offer them the opportunity to be furloughed. one thing, there's a couple of things that you would need to bear in mind in that. You might want to actually offer them that opportunity on a new basis where they forfeit or waiver their right to any benefits, for example, because obviously that's an expense that you as a company may not have planned for or may not be able to support. The only thing that you can't change is somebody's continuous service date. So just bear that in mind, because that might, depending on how long that arrangement goes on for, incur a greater deal of liability in terms of redundancy and other factors. Okay. So redundancy, I'll just very quickly go through this because you can find this information on the government's website or elsewhere if you need to, but just in case you do need to make redundancies in the next few months, this is just a highline education on this process. So redundancies are relevant when a business is about to or intends to stop trading, or when the business needs for a particular area of work to stop or decline. You are now, as I mentioned earlier, employers are required to consult, and I'm just very conscious that a lot of employers are making decisions very quickly at the moment, and may not be following this requirement to the letter. Essentially, what you're required to do is tell your people in advance of the potential for redundancy. So going back to my point earlier about the earliest you can start communicating with your people about the measures that you as an organisation might need to take, including making redundancies, the better. A period of consultation to discuss the situation with your people. You have to define and agree sometimes if it's a pooling arrangement rather than talking to an individual who is in a unique job, for example. You might have to apply objective selection criteria and look for alternatives to losing the people. Now, in the current climate, I would hope that the government would be a bit sympathetic to businesses, particularly where it's very clear that there's no alternative because the business might close. If you want to check out what your liability is for redundancy payments, there's a very handy redundancy pay reckoner on the government's website. There is a link to this. Go on there and have a go. Employees have to have at least 2 years service at the point of redundancy to qualify. And you'll need three or four bits of information: the date that you might need to make people redundant, the service in a full number of years, not if it's 2.5, it would be 2 years, for example, the person's age, because that also affects the payments at the point of the redundancy. Again, if they're 50.5, it would be 50, and the weekly pay. And it will give you the calculation. It's capped at £538 a week at the moment. And just bear in mind that individuals who are made redundant are also entitled to work or to be paid in lieu of their notice. Okay.
Right, moving on.
So the other thing very quickly is if your business is potentially going to make 20 or more employees redundant within a 90-day rolling period, you have to consult with employee representatives and observe any of the consultation periods as defined under the Trade Union and Labour Relations Consolidation Act. Typically for 20 people, it's 30 days, so just bear that in mind. And you would also need to notify the government via an HR1 form. With individuals, it's very much easier. You have to consult in a way that's fair and reasonable, and that might just be a week or two. Okay, next slide. Other ways to mitigate risk: inviting voluntary redundancies, and just bear in mind that furloughed workers can also be made redundant, subject to the normal consultation redundancy process. There is one area that I'm a little bit concerned about, and I don't think it's been tested in law again, but if you're at the outset of this and you decide that you need to make some people redundant, or roles redundant rather, and put others on furlough, bear in mind that the new scheme is designed to help everybody whose job would otherwise be made redundant. So again, I think that's just something to be very careful about. It's untested in law, but potentially there might be some kind of unfair dismissal claim there, and you would have to be very, very clear and rigorous in your rationale for making certain roles redundant, and not putting them on furlough, essentially.
Okay, thank you for that, Wendy. I'm conscious time is marching on, so just a couple of words about sick pay. Thank you all for your questions. I have to admit, I've been quite overwhelmed. I think we've had over 60 questions so far, and I'm conscious that time is marching on. We will collate those and try and respond after the webinar as best we can. My favourite one, though, so far is if you furlough an employee, how does that impact on his EMI share options where there's a minimum 25-hour working requirement? What a great question. Thank you for that one. We will check and follow up. So Wendy, do you want to just say a couple of words on sick pay before we start talking about the self-employment income support scheme?
Okay, I'll literally just read through this slide for speed's sake. Okay, so it does apply to businesses with less than 250 employees as at the 28th of February, and the government will refund up to 2 weeks statutory sick pay per employee who is off work due to the coronavirus. You don't need to get the normal fit notes or GP notes, but again, we're waiting the details on exactly how that's going to work.
All right, thank you, Wendy. And you've been talking about redundancy. We could, and I think we have in the past actually, done a whole webinar on redundancy payments and the 30k exemption. That's for another day. We're now going to hand over to Chris, who's going to talk us through the mirroring provisions for the self-employed that followed on from the job retention scheme. Over to you, Chris.
Thank you, Tony. So I'll try and be quite brief on some of this because there is some duplication, as we've alluded to the job retention scheme. So I'll try and go through quite quickly at certain points. Obviously, the scheme is fairly recently announced is open to self-employed and partnerships, which is good news for those in the partnerships. It's worth essentially the same value, 80% of business profits up to that $2,500 per month. And we're waiting to see, obviously, whether it be extended. Hopefully, we'll be out of this situation, and it won't, but it may be if needed. So the who can apply to this? There's some relevant key points here. Obviously, we know it's self-employed and members of partnership. You have to have completed an 18-19 tax return. So if you haven't, get that in. You've got till the 23rd of April to do so. Yeah, that is obviously key. You have to continue to trade in 1920. Also would be trading but for the coronavirus and have lost profits for the coronavirus and intend to trade in 2021. The key points for me there, it's one thing we're expecting is the revenue to somehow reclaim money at some point going forward, and I'd suggest being as up to date as possible where you can. We know, okay, if your 18-19's in, you're basis of a claim, but I would stress, please try and get 19-20 up to date. We'll be able to complete that from next week. Get the detail in while people are working at home, get things completed. The interesting one is having lost profits to coronavirus. Again, we're expecting the revenue at some point to maybe test this if you have the claim. It would probably be via an inquiry route going down the line. And it's an interesting one. As Tony would say, the devil's in the detail, maybe a bit more down the line. But if, for example, you have seen profits increase in 1920 from the 18-19 year, but inadvertently haven't increased as much due to the coronavirus, how will the revenue pick that up? Will they pick that up? Will they raise an inquiry? Practical points that suggest, obviously, be up to date with the tax return, get your 1920 in, and the revenue only have a year to look into that or inquire into that tax return. So getting it in early, and while that year, they'll be very busy in the first year. So that's recommended. Probably taking out professional fee insurance if your advisor offer it, BKO offer it, take that up. Likely, well, not likely, but there's a high possibility of an inquiry here. Professional fee insurance covers the fees in dealing with that inquiry. So just some basic points. If we move on to the next slide.
There we go.
There we go. So furthering on to who can apply. Profits, as most people probably are already aware of this, must be less than the 50,000, and the majority of your income must be through self-employment. The test is based upon 18-19, alternatively an average over the 3 years, 16-17, 17-18, 18-19. I think that's fairly simplistic calculations. If, of course, therefore you're concerned about 18-19's 51,000, you're fine to take the average, and assuming the average is below the 50 on the 3 years, you'll be okay. Obviously, if you've commenced trading after 16-17, they'll only look at, for averaging purposes, the years and you commence trading. So quite simplistic there. The grant is the 80% of the average profits, as I've already said. And hold on, Tony, actually look at this. Is it you going backwards on slides? No.
Oh, sorry. Apologies.
No, sorry, go back. Sorry, keep going. Go
Which
back.
slide you on? How much did you get?
Yeah, there you go. But I think we're on the right one. So it's I mean, as we've already said, essentially maximum 2,500 for the 3 months, and we know that the grant is going to be paid directly into the bank account in one instalment. So what's actually out there for you to do now? Well, very little. We know that the revenue are going to get in touch with those that are eligible. They will. The one part we do know is once they've been contacted, there's going to be an actual invite to apply then. We don't know how that invite is going to be. It might be via a personal tax account, or it might just be via a separate claim form. I think as a again basic suggestion, I'd get the personal tax account set up if you haven't got one, just to be ready. I'd also make sure advisors do have, if you've moved recently, and certainly in the last few years, make sure that Revenue do have the most recent contact details. It's an easy one to miss. I know advisors, and certainly BKL, we're not going to be able to go through every single individual with the Revenue at the moment to check ourselves. But if you feel as if it needs to be checked, we of course will do. So make sure that that's actioned as well. And the payment that when it comes, it will be made into a nominated account, as you say, will be on, no doubt, just be on the claim form. So as I think I've alluded to on some of these already, just the key action points for you. If you've not submitted the tax return, get that in. You won't be able to make the claim, or Revenue won't contact you to say you're eligible if you haven't got an 18-19 tax return in. Key, get that done. Contact details, we said, get up to date. If not already done so, register for personal tax account, the fee insurance, and complete the 1920 as early as possible. That will limit the inquiry window. So yeah, I think it's relatively more straightforward so far than the job retention scheme. But of course, if there are any further queries on this, we will happy to take them via the email. There are some, I put together a few frequently asked questions because there have been, say, some concerns over this. So I'll just happily read over a few bits that we have been asked. Obviously, some of these I've already touched on. How will the Revenue contact me? It's like we think it's going to be post. We don't know again. The detail doesn't stress whether it's going to be email, phone or post. I can't believe it's going to be email or phone, purely because of the potential for scams, in which case, as I've said, we've already seen a number of scams being out there. So keep an eye out, obviously, on post, make sure the contact details are correct, etc. So we suspect it's going to be written. If any communication, if you're in doubt, get in touch with advisor. We're happy to look over any contact. And of course, as soon as we know how it's being communicated, it'll be up on our website. So another query, if the profits for the current year 1920 exceed 50,000 and that of the previous year. Again, it's the claim is for the 18-19 year and the prior years. So we feel you will still be able to claim. I'm not too concerned on that. The guidance is clear. How the Revenue test it and suggest whether you're entitled to a grant, or sorry, whether they say whether you've been affected by coronavirus is the key point. Whether it's actually impeded your profits, then that's one to see. And again, the fee insurance I'd recommend to make sure that's taken out just to cover that point off. Ceasing to trade in 20, can I claim? No, that's a simple one per the guidance. Unfortunately, if you're ceasing trade, you cannot make that claim. And equally, commencing in March 2020, and it's an unfortunate one. I think people like if you were recruited on the 1st of March for the job retention scheme, unfortunately you're not part of the claim, and I wouldn't expect the Revenue to be in touch in that case. So moving on, the profits are over 50,000 and average 60,000 over the 3 years. So this is the point regarding household income. Brother and sister-in-law self-employed, 45,000 each and 90,000 of household income. This is again an unfortunate position, and the guidance, I think, is fairly clear on it that it's based upon an individual's income, not household, and that's very similar to the child benefit rules that are out there. It's just an unfortunate position to be in, and yeah, unfortunately that's just the way it is. Continue to show trading profits of 55,000, but make a pension contribution every year of 10. Can I claim? According to the guidance, no. We don't have detail of any deductions that's against the trading profits. Trading profits, from what I believe will be the case, will be tax adjusted profits, and those that essentially feed through to the tax return, that's where the revenue will be picking up. And they haven't alluded to deductions being made there, so gift aid, pension contributions, I think, will be ignored in that instance. So I wouldn't expect an invite from the revenue there to claim.
Okay.
Okay.
Thank you for that, Chris. I'm now going to hand over to Daniel, who's going to cover the coronavirus business interruption loan scheme, which I think has been the most controversial part of this. I suspect we're going to be 5 to 10 minutes over today. I hope you'll all bear with us. I appreciate most of us, unfortunately, don't have meetings to go to. I think this is very important. So, Daniel, do you want to talk us through that? Then we'll just have a quick look at the VAT and the other areas of support to finish off with. Over to you, Daniel.
Yes, thank you, Anthony, and thanks for leaving me the nice, easy one, because as you say, it's very uncontroversial and everyone's going to be delighted with this scheme. I don't wish to sound negative, and apologies now if I do. I think everything else that they're doing is very admirable, but this one does leave a lot of questions. Simply, it's a interruption loan scheme. It covers loans, overdrafts, invoice finance and asset finance for facilities up to £5 million. Loans and asset finance can be for terms up to 6 years, and overdrafts and invoice financing for loans up to 3 years. It's backed by the British Business Bank, but it's delivered by the banks themselves, and there are currently 40 accredited lenders. So the application is made directly to the bank, even though the British Business Bank is behind it. And as we'll see in a minute, there are some similarities to the old enterprise finance guarantee, and before that, the small firm loan guarantee scheme. So what actually are the benefits for the borrower of the business interruption loan scheme? There's really two. The second one, if you like, which is the one where it does compare a bit to the old enterprise finance guarantee and small firms loan guarantee, is the fact that the government provides lenders with a guarantee of 80% of each loan. The difference is that under those schemes, the borrower had to pay an additional 1% premium on the interest. Whereas with the business interruption loan scheme, the government is doing two rather generous things. One is paying the interest payments for the first 12 months, and the second is paying any lender levied fees in the first 12 months. A lot of the banks have said they won't charge fees for these loans, but if they do, then the government will pay them. Who is eligible? It's all UK businesses, and I stress the word business, so it's not just companies. Self-employed, partnerships, LLPs are all eligible to apply. The main restriction is that turnover has got to be less than £45 million. The loan has got to be a viable funding proposition. And what they're saying is that the business effectively wouldn't be struggling were it not for coronavirus. And obviously, like the old enterprise finance guarantee, the loan would have to be viable were it not for the lack of security. So the point is, the banks aren't just going to give these loans to anyone. They're going to give these loans where they like the business plan, they like the management team. There is a lack of security, but they're still going to want to be satisfied as to the serviceability of the loan. Obviously not necessarily in the first definitely not in the first few months whilst the lockdown is on, potentially not for the first year, certainly no interest payments, maybe capital repayment holidays as well, but they want to know that after the 6 months or year, whatever is up, that the company will be able to afford to repay the loan. So if, for example, you've got a loss-making business, it's highly unlikely you're ever going to be able to successfully apply for a loan unless you can demonstrably prove that you're your fortunes will turn around in the future and you'll become profitable. All trades can apply except for a few exceptions, which are written there: banks, insurers, trade unions, but pretty much any trading company, and I use that term loosely, are eligible to apply, and in particular sole traders, as I said before, are eligible to apply. In terms of security, so there's the banks can, and I stress the word can if they choose, make any loans under £250,000 unsecured. They don't have to, but they're entitled to. And if they do that, certainly the big four banks have all said that they will not seek any personal guarantees for loans under £250,000. We believe, therefore, that getting these smaller loans might be easier for borrowers than getting bigger loans. For bigger loans, where it is above £250,000, the lender has to establish the security that is available by the borrower, and has to establish in particular that there's a lack or absence of security. Obviously, that's not the case with asset finance, but they will go into what assets the borrower has, and in particular, if it's a company, what assets the shareholders of the company has. The only thing they can't take any security on is the principal residential property of the stakeholders. But other than that, they can take security. And what we are seeing is that for these loans over £250,000, they are asking for 100% personal guarantees, which has obviously put a lot of potential borrowers off the scheme. So in terms of the limitations, I think a lot of them are very self-evident. The banks, as we mentioned, are requiring personal guarantees in many cases. We are aware that some lenders will only lend to existing customers. I believe, and forgive me if I'm speaking out of turn here, but I've heard on the grapevine that HSBC and Metro Bank, for example, are two that only lend to existing customers. Apologies to them if I've got that wrong, but there certainly are some that only lend to existing customers. Those that do remember the Enterprise Finance Guarantee and the Small Firm Loan Guarantee Scheme, remember they were never that successful. And I think, given the similarities of this scheme, you can also see why it's not successful. And I would like to pause for a second and mention and actually read out to you, and forgive me for reading, something that Alok Sharma, the Secretary of State for Business, Energy and Industrial Strategy, said at the news conference yesterday. He said the Chancellor, together with the Bank of England and the FCA, wrote to the chief executives of the UK banks to urge them to make sure that the benefits of the loan scheme are passed through to businesses and customers and consumers. And it would be completely unacceptable if any banks were unfairly refusing funds to good businesses in financial difficulty. Just as the taxpayer stepped in to help the banks back in 2008, we will work with the banks to do everything they can to repay that favour and support the businesses and people of the UK in their time of need. I think that's almost a sign of admission that they recognise that this business interruption loan scheme isn't working the way they intended and isn't proving as popular, whether it's from the borrowers or the banks, the way they intended. Certainly the BBC and Sky News are reporting that they're going to be either amending this scheme or introducing a whole new raft of measures, and we watch this space. I suspect that Rishi Sunak, the Chancellor, will probably appear at possibly tomorrow, potentially tonight's news conference, and hopefully he'll have some news on an update to this scheme.
So watch this space, I think, is the message there, Daniel, isn't it?
Exactly.
Okay.
And the final point, which segues into the next one, is that Rishi Sunak has already recognised that there is a gap between the business interruption loan scheme and the corporate financing facility, which we'll come on to.
Okay, but Daniel, we've spoken to a few clients, haven't we? And indeed, we've had a few comments, thank you, coming in from people saying their experience with the bank so far has been pretty negative. Is that borne out by your conversations that you've had?
Yes, we've seen some below 250,000 sell through quite quickly, but otherwise we're seeing the banks are demanding very detailed financial forecasts. Well, I suppose one could say you can't blame a bank for wanting detailed forecasts if someone wants to borrow somewhere between £250,000 and £5 million from them, but they're taking their time. They're asking for personal guarantees. They're asking for lots of information. The idea of let's step in quickly and give businesses a loan that they need to get them through this lockdown isn't really happening the way I think the government intended it would.
Fair enough. Okay, let's move on then just quickly. I suspect this isn't going to be too relevant for many of our clients, but you mentioned the corporate financing facility, Daniel.
Indeed. So that is a facility which is made available to larger businesses. They haven't defined large, but as we'll see, it's businesses that are in sound financial health, and that is evidenced by a credit rating. It needs to be an actual credit rating by one of the credit rating agencies, or it could be an imputed one. That's something that the Chancellor recently added. And by imputed, it means that the sponsoring bank will have to tell the Bank of England that the credit rating is good enough. It says businesses need to make a material contribution to the UK economy. We're not quite sure what that means. What actually happens in the corporate financing facilities is these larger businesses issue commercial paper which mature in anywhere between 1 week and 12 months, and the Bank of England will buy them. So it's a way of providing working capital to these larger businesses. As you said, Anthony, it's probably not going to be relevant for most of our clients or most of the attendees in this webinar, but certainly there is a gap between the business interruption loan scheme and this scheme.
Okay. All right. Thank you for that, Daniel. So all of the schemes we've looked at so far, on the face of it, very helpful. There's clearly problems with the bank interruption loan scheme. We hope we'll get some further helpful announcements. There is some good news, at least. There is some immediate relief on the horizon with regard to VAT and income tax liabilities. There is an immediate deferral of liabilities. All businesses can apply to defer VAT payments that are due between the 20th of March and the 30th of June 2020. If you set up a direct debit for your VAT liabilities, we recommend you cancel that. Otherwise, the money might just be taken anyhow. And instead, your VAT liabilities can be paid off by the end of the tax year, 31 March next year. But don't worry if you're due a refund or a reclaim. HMRC say that will be processed in the normal manner, albeit we do have concerns. Inevitably, even HMRC are suffering from coronavirus and moving substantial numbers of staff to assist with the implementation of all those schemes. So it wouldn't be a surprise if refunds are inadvertently delayed. From an income tax perspective, any payments due on 31 July 2020 are automatically deferred until the next payment date on 31 January 2021. When these rules were first announced, it was said for the self-employed, but that's now been clarified, expanded. It applies to anyone who has income tax due. It is optional. You can choose to pay, but why would you, given there's no interest or penalties that will apply if you choose to defer payment by 6 months. So all good, and that certainly should be immediately welcomed as assisting people's short-term cash flow requirements. What about other tax liabilities? As we said at the start, HMRC have dusted down their old time to pay arrangements. These have been around for a long time. I have to say my own personal experience of these has been HMRC haven't been particularly sympathetic or helpful when we've asked them. But in theory, if you have any tax liability, you can ask HMRC to defer that payment and to put in place a bespoke payment arrangement. It doesn't necessarily set aside interest charges on that, but it does keep HMRC from the door. Again, typically, they would ask for documentation in support of that, cash flows, etc., etc. One would hope, given all bets are off in the current climate, they would be a little bit more sympathetic. But in theory, it's simply a case, if you have any tax liability, of phoning HMRC as a specialist helpline for time to pay and asking them to set up and to consider a separate time to pay arrangement for you. And of course, we at BKL can help, be it with ensuring you have the correct profit forecasts and cash flow forecasts to support that, or dealing with these negotiations on your behalf. So to finish off with, I'm going to hand back to Daniel, who's just going to talk very quickly about some of the rates reliefs that have been announced, both in the budget and what's been built upon since that to further support coronavirus.
Thank you, Anthony. So yes, to talk about rates, I think it's worth quickly reminding ourselves what happened in the budget, which was It was only the 11th of March, I think, wasn't it? But it does seem like a lifetime ago already. What happened there was that the retail discount for those in the retail sector for properties with a rateable value of less than 51% was increased from 50% to 100%. So in other words, retail companies with a rateable value of less than 51% weren't paying any rates. And as you can see, there's a pub discount as well. That's where we were on the 11th of March. If we move forward to the next slide, we'll see that what they've done now is they've now given a business rates holiday for the whole year. So in other words, even if your rateable value is more than 51,000, if you're in the retail, hospitality or leisure sector, there will be no rates at all this current tax year. The definition of retail, hospitality and leisure is quite wide. It's available on gov.uk. It includes things like travel agents, estate agents, self-catering accommodations. Some of those things people might not have thought would count as retail, hospitality and leisure. So lots of businesses are going to be eligible for this, and it applies automatically. The local authorities will apply the discount. Some of them have, of course, already sent out their business rates reminders for the year. They'll be reissuing them, but it should be automatic. On top of the rates relief, there are 2 new grants, which again ought to be automatic from the local authorities. We understand central government have already paid out the local authorities, I think it's £12 billion to cover these grants. The first one is the Retail, Hospitality and Leisure Grant, and for companies in those sectors, if the rateable value of the property is under £15,000, they get a £10,000 grant, and if it's between £15,000 and £51,000, they get a £25,000 grant. That grant applies per property. There is also a separate grant, which is called the Small Business Grant Fund, and very similarly, that's a one-off grant of £10,000 for properties with a rateable value of less than £15,000. Here, the only requirement is that the businesses receive small base relief or rural rate relief. So in other words, it's not restricted to the retail, hospitality and leisure industries. So this is available for anyone, including those outside those industries. And as with the previous grant, it's applied automatically by the local authority and it's per property. The only thing to note is that if you are in the retail, hospitality and leisure business and the rateable value of your property is less than 15,000, you can't claim 2 grants per property. You can't get one on the retail, hospitality and leisure grant and a separate one on the Small Business Grant Fund. It's one or the other.
Okay, thank you. John's raised a point, and I picked this up in the news yesterday, so thank you, John, for your comments. One of the few businesses that's thriving in the current environment are the supermarkets, and yet it's estimated will be benefiting by some £3 billion, I think the suggestion was, by some of this rates relief. So it might be suggested that some of this could be better targeted, but I think one can only applaud the aims of the government to assist businesses who need that assistance at the moment.
Yeah, exactly. I think so. I think obviously the latter 2 grants probably won't apply to the supermarkets, possibly to some of their smaller express stores, but the rate holiday certainly will apply. But I think it's probably very difficult for the government to define what is a supermarket and what some other food retailer. And yeah, I think they've probably got other things to concentrate on that are more pressing.
Indeed. So to bring us home, Daniel, do you want to just cover? There's a few smaller areas that we'd just like to flag up before we wrap up today's session.
We've got a much fuller list on our website, bkl.co.uk, and if you scroll through to the coronavirus section of our website, you'll see a much fuller list of all the other reliefs that are available. To very quickly mention 3, there is a protection from eviction. That's both on commercial tenants and on residential tenants. Rent is still due unless you can negotiate a rent holiday with your landlord. Rent is still due, but if you don't pay your rent, your landlord is not able to evict you in the next 3 months. Second one is a company's house extension for filing accounts. It must be applied for. Apparently it takes about 15 minutes for it to come through, but they will automatically give that extension if it is applied for, if you say the reason for wanting the extension is because of coronavirus. If it's not applied for and the accounts are filed late, there will be a penalty. But if the extension is given, then there's no late filing penalty if they're applied within the 3-month extension. And the final one to mention is the suspension of wrongful trading provisions. The idea here is to give a bit of breathing space for businesses who could be in danger of trading whilst insolvent over the next 3 months. And it's to encourage businesses to see if they can find a way through it, trade their way through it back to profitability, rather than, as they normally would be, worried about whether they are trading insolvently and therefore whether the directors would be personally liable for wrongful trading.
Again, until we see the exact changes to legislation, I think we need to be a little bit cautious there, don't we, Daniel?
Absolutely, yes.
Okay. Right. Thank you for that. And that pretty much brings us to the end. Thank you all for your question. I'm sorry, I got quite overwhelmed with questions on the worker support and the job retention scheme. I'll try and look at those offline and try not to delete them. Final point I'll leave to John, who's been very busy today, talking about possible windfall tax in the next budget. Certainly what we have been put on notice by the Chancellor is in particular the self-employed, and I suspect all of us may be expected to pay a bit more after all of this is over. Well, look, we'll worry about that in due course. For now, thank you for joining us. There's our contact details. We're very happy to help. I'll try and respond if I can work out how to save all the questions separately to your questions. Apologies if we haven't, but it's really helpful even just to understand what issues you're all having. We'll put some more stuff up on our website to address some of those questions as appropriate. There's a link to our website here. Yes, of course, we'll be sending you all an email with a link to this webinar. So if you want to listen to it again, you can, or you can pass it on with pleasure to your colleagues to listen to. And above all, take care, be safe. We look forward to a degree of normality and catching you up with you all soon. Do keep in touch with us. We're all working from home, but we're all contactable in the normal manner. If we can help you with any of the issues we've raised today, we'd be delighted to. But for now, delighted to see the IT held up. Delighted my hyperactive Jack Russell didn't bite through any cabling. So all good. We wish you well, and hopefully we'll see you all again soon. Thanks now. Bye-bye.
Bye.